Ever wondered how you can make your money work for you every single month? Imagine getting a steady paycheck without lifting a finger. Today, we're diving into the bond check-a-month strategy, a game changer for everyone looking to add some stability to their investment portfolio while getting a steady monthly stream of income. And the fun part? You don't even need to clock in every day. Now you might be thinking, bonds? Aren't they complicated? Not at all. Bonds are actually one of the most straightforward investments you can make. Bonds are like IOUs. When you buy a bond, you're lending money to an organization. It could be a corporation, a municipality, or the federal government. In return, they promise to pay you interest at regular intervals and return your principal at maturity. We'll put a card on the screen with some videos about bond basics. So what exactly is the bond check-a-month strategy? It's a way to structure your bond investments so that you receive interest payments every month. Here's how you can do it. Diversify your bonds. Buy a mix of bonds that pay interest at different times of the year. For example, some bonds pay in January and July, others February and August, and so on. 2. Ladder your bonds. This means buying bonds with different maturity dates. As each bond matures, you reinvest the principal in a new bond, ensuring a continuous stream of income. Have you ever considered investing in bonds? Or are you already investing in bonds? Which type of bonds are your favorite? Let us know in the comments below. Let me tell you about a customer of mine, Jane. Jane was a school teacher who wanted a reliable income stream for her retirement. She had a pension from all of her years of teaching, coupled with some income from real estate she and her husband Doug owned. So even though they were retired, they were in a relatively high tax bracket. They were beginning to unwind their real estate investments, and the sale of one of their properties yielded $300,000. Jane asked me if I had any ideas of how they could invest it. So I suggested she invest in municipal bonds using the check-a-month strategy. I picked 6 different 50 bond pieces of municipal bonds, each coming due in a different month, so the semi-annual payments would cause a payment each month. Each bond had a 4% coupon rate. Each month, she received a $1,000 payment in her brokerage account, and the added bonus, they didn't have to pay a penny in income taxes on the annual total of $12,000. Jane was thrilled because she didn't have to worry about market fluctuations or missing a payment. Her strategy paid off, literally, giving her and Doug peace of mind and financial stability. They liked it so much, they came back and did it again when they sold the last of their properties. While that's a big dollar amount, you can do a municipal check a month with as little as $30,000. That's 6 5-bond increments, each in different month combinations, causing the monthly payout. With corporate or U.S. agency bonds, you could start with as little as $6,000. Here's a bonus tip for you. Did you know that some brokerage firms will actually cut you a monthly check from all of your dividends and interest earned in the previous month? That's money in your pocket, literally. Check with your specific firm to see if they offer this service. If thoughts of this regular stream of income are triggering your champagne wishes and caviar dreams, give us a thumbs up or hit the subscribe button. Your support helps us bring you more valuable content. I know a lot of our viewers are big-time stock investors, so let's quickly answer the question, why bonds? First off, predictability. Bonds offer a fixed interest rate, so you know exactly how much you'll earn and when you'll get paid every month. Next, stability. If held to maturity, bonds guarantee the return of your principal amount, barring any defaults. You simply don't get that with stocks. Next, immunity to interest rate fluctuations. Now I know this sounds crazy. I'm buying something that is tied to interest rates. But if you hold a bond to maturity, you don't have to worry about market interest rate changes affecting your investment. You can't say that about stock dividends. I've seen plenty of stories in the financial news about companies having to cut their dividends. All this said, it doesn't mean you can't build stock dividends into your check-a-month plans. The fun thing is, since they typically pay dividends quarterly, you only need 3 different stocks to do it. Give it a try. Here's a tip from my 30+ years of trading bonds. When it comes time to retire, think about setting up a check-a-month plan in your Roth IRA using a nice diversified combination of treasuries, U.S. government agencies, taxable municipals, and corporates. Because your investments are in a Roth IRA, all of these bonds that make interest payments that are normally taxable by Uncle Sam are all paying you a taxable rate of income, but you won't have to pay taxes on it. I hope that got you so excited that you make an extra contribution to your Roth IRA this month. Before we wrap up, here are some actionable steps you can take. First, assess your current investments and income needs. Second, research bonds with different payment schedules. Third, start small, maybe aim for quarterly payments before moving to monthly. Fourth, consult with a financial advisor to create a plan that fits your specific situation. Fifth, and this comes from my experience as well, be patient. You might jump on a platform like Fidelity or Schwab today and find that there aren't enough bonds that meet your ratings, price, yield, or maturity needs. That's just the nature of the bond market. Sometimes what you want to buy just isn't there. Check back regularly. I usually check daily when I'm looking for something that's kind of specific. And don't stray from your investment objectives to try to get a specific month bill, especially on rating. Always buy the level of credit rating that you're comfortable with. Check out our previous video on different types of bonds, where we'll explain some of the bonds I mentioned in the Roth IRA example. It's packed with tips and tricks for beginners. We'll put a link in the end screen. And as always, consult with a qualified financial professional before making any investment decisions. Remember, bonds can provide a stable and predictable income stream, making them a valuable part of any investment strategy. Until next time, this is Michael O'Donnell saying, always think of bonds if you're looking for an investment where you know exactly what you're going to get and when you're going to get it. This video is for educational and entertainment purposes only and is not meant to be financial advice. Always consult with a financial professional before making investment decisions. Your financial situation is unique, and what works for one investor might not work for another. See the description for the full disclaimer. Thank you so much for watching.